If we're buying a house in 2025 here in Northern Virginia, we need to find out how and when and who is the right candidate to be buying a house in Northern Virginia this year. Hey, it's Tim here, and I am really excited to be here with Valentina Balderson of Guild Mortgage, and she's going to talk to us about what we need to do to prepare for buying a house. So Valentina, tell us, when someone calls you, and we have a client reach out to you, they say, Valentina, I want to buy a house. What is that conversation like, and what kind of things do you discuss?
Well, the interest rates are really volatile right now, and there's so many key factors that basically have an impact on rates.
Yeah.
Bottom line, the rates are the lowest right now since September.
Okay.
And again, depending on the integrity of the file, the loan, and all guidelines of the program, but they're basically in like low six.
Okay.
And with considering options for permanent or temporary buy down, you can actually even have a rate below 6.
That's incredible, because I remember last year, even in 2022, 2023, we were seeing things go up. They were way above 7 at some times, right?
Oh,
so we've
absolutely.
been seeing them coming down pretty, I mean, not fast, but steadily, right? Over the last few months? Or
Yes.
Okay.
Over the last few months. And the big thing that is impacting rates right now, and the big talk, is about the tariffs. And that may take actually several months for the investors to be able to predict how tariffs will have an impact in terms of long-term inflation rates. Because remember, mortgage rates are long-term rates. And the main factors are inflation. Is the inflation under control? And also government spending. So with that being said, a lot of people ask about federal rate cuts. The Federal Reserve is having their meeting this week, and the expectations are for rate cuts in possibly June and September. The interesting thing is that slowing economy is usually not good for the stock market, but when it comes to mortgage rates, it usually translates into decreasing mortgage rates.
Okay.
And any economical growth. And we actually just had one inflation reports last week was showing lower expected inflation rates.
Right.
It still did not have an impact on the mortgage rates.
That's what I was thinking. I mean, so we saw this, we heard this good news. Like, okay, look, it's a CPI, or was it the CPE? Oh, it's getting closer to that 2%, what they really wanted. It wasn't there exactly. And we thought, okay, good, this is going to actually help us. It didn't do anything.
It didn't really change.
So when a buyer have a consultation with you, what are some of the first 3 things you're going to be asking a buyer when they're looking at purchasing a home in the next 3 to 6 months here in the Northern Virginia area?
Again, just to finish up the rate conversation,
Okay.
we discussed that. And we can get into numbers as well. We look at the average nationwide for the 30-year fixed mortgage. We also look at the 10-year Treasury bond yield for the day, which, for example, on Friday was 4.288. And generally, if that rate goes down, there is a possibility of mortgage rates to go down.
Okay.
But then again, the rates are based on inflation, economic growth, the Federal Reserve monetary policy at the moment, the bond market, like we just discussed, and also housing market conditions. Because when it's all about supply and demand as well. Again, the best time to buy a home can depend on various factors, but the most important thing is basically your personal financial situation. Are you financially ready?
I mean, that's the thing, right? We're asking the same questions when I meet with clients the first time. I had them this weekend, and I said, we want to purchase a home, want to be in this area of town. I said, that's great. I said, I'm excited for you guys. I said, so how long do you feel you're going to be in this area? If it's going to be, and then they said they gave the number 5 to 7 years. I said, okay, when you have that kind of a long-term outlook, then you'd probably be a candidate for considering purchasing a home. So that's so important. I love that you mentioned that, because I think it doesn't matter what I say or what you say. It's let's look at the numbers and let's make sure you feel financially ready based on what's going on, credit score, job security, all of those kind of things. So those are very important.
Yes, and the key aspects to consider is, again, credit score. Ensure your credit score is in the good shape because that significantly impacts your mortgage interest rate and your loan approval. The second thing would be down payment. Determine how much you can afford to put down. And some loan programs basically require higher down payment.
Okay.
While there's government programs and there's programs actually zero down payment, programs depending on basically your goals and needs. Another very important thing is debt to income ratio. It's basically lenders look at your debt to income ratio to consider your ability to manage mortgage payments, really.
Right.
Loan options. It's good to get a better understanding of the loan options available. Like I said, there's some with higher down payment, and that would be a great option for borrower who wants to have the minimum as possible monthly mortgage payment and also the best interest rate. And on the other side, you can look at for people who are having a good, stable employment, good credit score, but short on funds. There are those programs to where they can purchase even with a zero down and consider a down payment assistance options. And like you said, closing costs. Be aware of the additional costs involved in closing the deal, like appraisals, settlement company charges, escrow, just so you can be better prepared.
Yeah.
And make that informed decision about your home purchase.
Now that you have everything, we looked at your credit score, we looked at your financials, we know what the closing costs are going to look like. You're probably going to be able to provide them some type of, what do you call it, like an estimate of a purchase price and a loan estimate, so that they can see that, okay, this is my out-of-pocket on day one of buying that house, and then understand what my ongoing mortgage costs will be.
I mean, this is a pretty streamlined process, and it's good to have clarity.
Yes.
And better understanding for the borrowers of their own financial situation. And it's much easier to get them ready and have a goal and a strategy and what's important to them. As I said, right now there's so many options to consider and help people get into homes. Whether it will be lower monthly payment, which again we have those options for lowering the interest rate, discuss potential options for permanent or temporary buy down on the rate. We also have for people who just their concern is cash out of pocket to be low as possible, down payment assistance options and zero down programs. I mean, right now, it's just if you're determined and if you have that goal, there's always a strategy.
All right, so in 15 seconds, what are the top 3 things we need then, Valentina, for just to get going with understanding our financial readiness for buying a home?
Credit score, down payment, debt to income, interest rate, closing costs.
Okay, so I said 3, you said 5. That's good. Thank you so much for hopping on today with us, Valentina. If you want to reach out with her, just click the link below.
It's been a pleasure.
Yeah,
Thank
great.
you.